So, guys, in the previous class, we were talking about bond market, and also we discussed about types of bonds, right? What is fixed rate bond, floating rate bond, and what is zero coupon bond? How the bond holders will get an interest and a return with this zero coupon bonds. Sorry, and also what is the deep discount bonds, inflation linked bonds, and we spoke about puttable bond, callable bonds, municipal bonds, corporate bonds. All these things we discussed. And we have a few more types of bonds that we have to discuss. We'll cover those topics as well. Then we'll jump on to the another topic, the same bond market. Okay. So, angel bond and junk bond. These are the two bonds we'll have to discuss. So, angel bond means just give me a minute. Yeah. So, angel bond means normally like there will be grading for every bonds. You know, the grading depends on the credit worthiness. We spoke in the first class itself, right? Based on the we have a civil score, credit score, right? Similarly, even bonds and the issuer will also have a rating. A plus, A rating, B plus, B rating, C, triple A bonds. Like that, there will be ratings for every bonds. So it depends upon the bond, the interest rates will be there. Suppose A plus or triple A bonds is more reliable and there won't be default from the issuer side. There will be prompt payment of interest and prompt payment of principal amount also will be there. Well, reputed companies now will issue this AAA bonds and A plus bonds, A graded bonds. That means the default charge will be very less. The credit rating is very high. So that reason the interest rate will be very less. So why the interest rate will be very less? You have a good reliability and less chances of default. Why they're paying less interest? Any guess? Hello? Hello?
Uh,
Yes, Mahesh.
yes, Mahesh.
Anyone guess
I
why
can
there
see
would
it.
be a low interest rates for this angel bonds? Because there will be high credit rating and there won't be chances of default in interest payments or principal amount payments. Anyone tell me? Okay. The reason is if they're paying correct interest and if the company is well reputed company, they have a high credit rating, definitely they don't need to worry about selling of a bonds, right? So definitely everyone will prefer to purchase those bonds because the risk is very low. How the risk is very low? There won't be chances of default. The default chances in terms of payment of interest and payment of principal amount is very less. That's the reason they will pay less interest. But at the same time, there will be another kind of bonds where the risk of default is very high. I mean, we are not sure about the interest payments. We are not going to be sure about the principal amount and maturity. They may even get default also. Then we don't get even anything. Those kind of bonds also will be issued, like a C graded bond, B graded bonds. So in those bonds, the interest rate will be very high. You know why? The credit worthiness is very low. The credit rating is low. So no one will prefer to purchase those bonds. That's the reason they will attract the investor through high rate of interest. That is called junk bonds. Based on the credit rating and the credit worthiness, these bonds categorization will be done. Like angel bond means having high credit rating and low interest rate. Junk bond means high interest rate and low security. The credit rating also will be very low in case of junk bonds. Understood, everyone?
Yes,
Yes,
Mahesh.
bro.
Yeah. Then, so that we have completed the concepts of types of bonds. Now we'll talk about pay down concept, day count conventions, and dirty price, clean price. Then we will go to the general entries of the bond related. Okay. We'll talk about pay down concept. This pay down concept is also related to the bond market only, especially the bonds, loans, and all. Did anyone heard about this word a pay down concept? Let me tell you an example. Suppose if I'm taking a home loan, okay, home loan. Home loan is 50 lakhs. Okay. There will be an EMI. You know about EMI, right? It's a monthly installment amount, equal monthly installment amount. Let's assume monthly installment is 40,000. So this 40,000 includes what? Interest amount as well as the principal amount. You know this concept of EMI, right? Everyone
Yes, bro. Yes, bro.
know the concept of
Yes.
EMI. So in this EMI, there
Yes,
will
sir.
be
Yes, sir.
interest amount plus sorry, one second.
Interest amount and principal amount.
Interest amount and
Principal
principal amount
amount.
also will be there. So both will be paying. So that what will happen? The outstanding home loan will be keep on reducing on every payment of installment. Suppose the first year we have 50 lakhs, maybe this 40,000 will be paid for like 1 year. Then this outstanding loan, we know about the outstanding, the amount of a principal amount left to pay, yet to pay. That is an outstanding loan. So outstanding loan would be somewhere like 45 lakhs or 45 lakhs. Yeah, let's say take it as 45 lakhs. But if you want to pay off this loan amount quickly, we have an option that along with this interest amount, we are paying this interest amount 40,000, right? So what we will do, suppose in the first month, I have 40,000 I paid, but in the second month, I got excess cash 1 lakh, maybe some uncertain profits came to me. So I want to pay this extra amount as well. Extra amount. So what I'll do, in addition to this 40,000, I'll also pay 1 lakh at additional principal amount. EMI only, but this is the regular EMI, 40,000. In addition to that, what I'm paying? Extra amount I'm paying.
1
So if
lakh.
I'm paying this extra amount like this, 1 lakh, 1 lakh, and here also I'll be paying 1 lakh. So in addition with the regular installments, I'm paying whenever I have excess cash balance. In addition to reduce the outstanding balance, I'm paying this excess cash. So if I'm paying like this excess cash along with this installment, what will happen? The outstanding amount will reduce, right? If I pay 40,000, my outstanding at the 10th year, maybe after 1 year, it will be 45 lakhs. But I'm paying extra
Yes,
1
sir.
lakh, 1 lakh whenever I have excess cash. So my outstanding will be 42 lakhs only. Why 42 lakhs? Because I paid 3 lakhs excess, right? So the principal amount of outstanding reduced. Getting the point?
Yes, Mahesh.
Why we have to pay this excess cash, sir? Because the interest amount will be calculated on the outstanding amount only. We are paying the EMI, right? In this EMI, there is an interest amount, principal amount. How normally the interest will be calculated on outstanding? Suppose first year 40 lakh, 50 lakhs is there, and 50 lakhs interest will be calculated, and that will be divided for the number of years. Let's say like 30 years or 40 years. After paying this 40,000, in this 40,000 also, there will be, let's say like 30,000 principal amount will be there, and 10,000 interest amount will be there. So principal amount is reducing only 30,000. So on this 50 lakhs, 30,000 will be reduced, and remaining outstanding balance, interest will be charged. Getting the point?
Yes, bro.
Yes,
Yes,
sir. Yes,
Mahesh.
sir.
You know this concept, right? How the EMI will be calculated on outstanding balance? Everyone. Non-common
Yes,
students
bro.
also. It's very basic concepts, guys. Even if you're purchasing a mobile phone also, the interest amount will be calculated on the outstanding amount only.
Outstanding.
Right? So in order to reduce that outstanding amount, what we are doing? We are paying excess amount. Pay down is nothing but paying more than the minimum amount. What is the minimum amount or monthly installment? 40,000. We are paying more than this 40,000. That is called pay down concept. Everyone understood what is a pay down concept? So whenever we pay this pay down, additional amount in addition to the minimum monthly installment, the outstanding loan, the outstanding of principal amount will be keep on reducing. So the burden of interest will also be reduced. That is called pay down concept. Everyone understood?
Yes, bro.
Yes.
Yes, sir.
Then next one, Dacon convention. You know what is Dacon convention? Anyone heard? Anyone heard about Dacon conventions? Basically, there will be interest calculations for every bond. We have seen, right? The interest payment, the interest calculation will be there for semi-annually, annually, or even for 6 months once also. Like that, we have seen a few examples, right? So the Dacon convention means it's a common rule. Suppose if I am calculating one interest method, okay, let's say I'm calculating this interest for 30 days. For every days, there will be calculation of interest on my bond. Similarly, other company may also considering 31 days. If I take it as a month, how many days will be there in each month? 1 month will be having a 31 days, 30 days, 29 days, 28 days. So there will be variations on every month, right? Correct it. So on a month by month, I cannot consider. So on days only, I have to calculate the interest, because if it is a one bond, 100 rupees, 1,000 rupees, that's quite small amount. What if it is in a crores? Even 1 day interest is also very important, right?
Yes, bro.
So that's the reason. Based on the number of days, we have to calculate the interest. How the number of days between the two dates is calculated for the interest calculation. That is the purpose of day count. Every day need to be counted to calculate this interest. You don't believe there is a market. We have a bond market, right? Similarly, there is a market for the money market. You know what is that money market purpose? They will, any commercial business and also the enterprises and all can get a loan for even 1 day also. Suppose for today, only for 1 day, if I need capital, like a 10 crores, 100 crores or something, I can borrow for 1 day or 1 night, 2 days, 3 days also there will be borrowings. That is the money market, only for short-term requirements. For single day, 1 night, 2 nights, like that, they will borrow money from the banks or maybe closed associations. There will be borrowings for short period, very short period. That is called money market. So just understand the importance of days for huge cash. It may be debt, capital, equity, whatever it is. When we are calculating the interest, definitely the days need to be counted. Understood. For that reason, we have this concept called day count conventions. So in this day count conventions, most of the companies will follow this day count convention. So there won't be confusions in calculation of interest, or maybe the recognition of interest part in our financial statements. There will be certain uniformity, right? So to bring that uniformity in the recognition of a bonds income and interest part and all, we have this concept called day count conventions. Understood as of now, everyone?
Yes, bro.
Yes, Mahesh.
Sir. Yes, sir.
Everyone? Okay.
Yes, sir.
Yes, yes.
Once again. Now we will see few day count conventions we have. The first one is actual by actual. Let me write here. Actual by actual. So in this convention, actual number of days between two dates. Actual number of days between two dates is divided by the actual number of days in the year. Suppose there is an interest payment on June 30th and December
December
31st.
31st.
So that means they're paying interest semi-annually. For every 6 months, they're paying interest. That is on June 30th and June 31st. Now I need to calculate the number of days between these two dates. How should I calculate? How to calculate?
Every 6 months will be calculated.
Yeah, so between these 2 days, from June 30th will be paid, right? So
Yes.
July 1st to 31st December. How many number of days will be having? Those number of days will be considered and divided by. Suppose
25.
1 year may have 365 days. Few years may have 366 days also, right? 365, 360 days. Why?
One
Leap year. That's the
Leap
reason.
year,
year.
sir.
So we have to consider actual by actual, means the number of days between, number of difference between these 2 days divided by actual number of days in the year. That
Actually.
will be considered. So that is called actual by actual.
Actual by actual.
Understood, everyone?
Yes, bro.
There will be like, suppose if I take 1 year from December 31st to again next payment is June 31st, from January 1st to June 30th to June 30th. So during this period, some days will be like February 28 days and 29 days also will be there, right?
Yes.
So
yes,
whenever
bro.
we get 28 days, 29 days, the leap year, the total actual number of
Leap year.
days in the year also will be changed. For that reason, we
Change.
use actual number of days. Whatever the actual number of days we have between 2 days, that number of days divided by number of days in the year. That will be considered
Number
for
of
the
days.
to calculate an interest.
Actual by.
Understood?
Yes, bro.
Yeah.
Yes,
The
Mahesh.
next one, sorry guys.
Nothing, bro.
The next concept is actual by 360. Actual by 360. So in this actual by 360 means the actual number of days between again two dates of interest. and that will be divided by the 360. Why we are considering 360 only? Why not 365 or 366? Sometimes some companies may consider 360 days, 365 days also will be considered. We will exclude few major government holidays and we will consider 360 days. And some companies will consider 365 days. They won't consider 360 days, 366 days. As a year, most of the cases there will be 365 days, right? So 365 days will be considered. Actually, by 365 only will be considered. Understood? This is called
Yes, sir.
actual by 365. Then we have 30 by 360. 30 by 360 will be there.
360.
What is 30 by 360? Interest will be calculated for every 30 days. And as a
30
year, we
days.
are considering 360 days. Again, the
360
similar
days.
method will be there. 30 by 365 also will be there. 30 by 365.
360.
That one also will be there. So these are all the day count conventions, guys. Basically, to calculate the interest between two interest payment dates, we use this concept called day count conventions. Everyone understood?
Yes, Lord.
Basically,
Yes,
the
Mahesh.
choice of
Yes,
day count
sir.
convention will affect the amount of interest also. Suppose if I select the 30 by 360, interest amount would be different. If I choose actual by 360, amount will be different. If I choose 30 by 365, the amount of interest also will be different. Especially for the bonds and loans with this irregular payment schedules, will be there. A lot of times there will be irregular interest payments and all will be there, right? So to bring some
Yes.
uniformity in the preparation of financial statements and everything, they have prepared these concepts called day count conventions. Based on the industry standards and regulations only, they have prepared everything. Okay.
Okay.
Yeah. Now we will see the most important concept: dirty price and clean price. Dirty price and clean price. Very, very, very important. Bonds. If they want to ask you, you may get a question about yield to maturity and bond valuation and zero coupon bond, and there is a relationship between interest and bond price, right? That one. Then pay down conventions, take home conventions. The next most important concept is dirty price and clean price. On all these topics only, there will be questions from the managers if they want to touch anything. Even today, also had an interview with which company? Some fintech company. I don't know how to name it. So they also had a question from the zero coupon bonds. How zero coupon bonds will work? How the investor will get a return? These kind of questions only will be there. Okay, that's the reason these points are very important. And dirty price and clean price. First, let's understand the interest payments. Okay, let's take the same example. There is an interest payment on June 30th and December
December 31st.
31st. Okay, let's consider the face value of a bond. The face value of a bond is 1000 rupees. And they're paying an interest of 5%. Interest of
5%.
5%.
5%.
Okay. Now this bond is available in the market. If I am purchasing this bond, let's assume the face value and market value is same. Okay, let's for some time, let's consider it as the same. Suppose if I am purchasing, suppose they're issuing a bond on issued bond on Jan 1st. When Jan 1st they issued. If I purchase this bond, I can get it for 1000 rupees. Let's assume
1000
again they're
rupees.
issued at par. Whatever the face value we have, at the same price they are issuing. So if I purchase this bond on January 31st, how much I can pay? 1000 rupees. Suppose if I'm holding this bond for 2 years, let's assume I'm holding this bond for 2 years.
2 years.
So when I'll be receiving an interest?
June 13th.
June
One will be
2023, June 30th, 2023, I'll
and
receive an
December-
interest. After
Yes.
that, December
And
31st
December 31st, 2023.
will be receiving an interest. Let's assume for
On
these two,
13th will be
let's forget 1 second, guys. Okay, 1 year only.
1 year.
In these periods, I'll be receiving an interest. Let's calculate an interest for June month and December month. How much I'll be receiving? If they're
6
following
months.
by actual, if they're
300.
following actual by actual, then how many number of days will be
300.
there? Let's assume they are calculating for actual by
That
360 or
360.
365. Okay, whatever. Let's calculate as actual by 365. Now I want to calculate the interest payment for the June 30th. How much I'll be receiving? I need to know. How much?
Extra per 1,000.
So end date is
Dates.
30th.
13 June.
1 second. 30th June 2023.
To 3
Start date is 01.
January 1st.
Sorry.
01/23.
01 2023.
23.
Whatever. We have to use the reference, I think, in this case. It won't work.
Zero.
The
Sorry, here 6 months back, you have 1 mentioned 2023. That
Yeah,
is
start date
12,
only.
31st.
01/01. 01/01.
The start date and end date.
Why it's not working?
It's also
Let me write the dates here. One second, guys.
January 31st.
And here I'll write 30th June. Simple. Okay. Now we got
180.
180 days. Okay. And if I want to calculate interest for this days, how to calculate?
Right.
What is the face value of a bond? 1,000
1,000
rupees, right?
rupees.
1,000 rupees into what is the interest rate? 5%.
5%.
5%.
5%, right? Now, these are the days divided by how many days we're following? 365 days, right?
365.
Right here, actually. I'll write here. So 1,000 rupees face value into 5%.
5%.
6 months interest, right? So, but I need
That
180
is 1 day interest or 6 months interest. No?
divided by 360. Directly, no. Okay. I think I have to put in these two. Into 180 divided by 360.
60.
So 25 rupees interest on June 30th. Similarly, how much interest I'll be receiving in the month of December?
Same 25 will be
Again,
coming.
it will start from July 2023, and it will be ended on 31st, 2023.
23.
So let's calculate the number of days. So end date is this one. Start date
180.
then 183 days,
180.
because we have August and September for twice, right? August and July, 31 days, 31 days in the second half.
Yes.
So now we'll calculate the interest again for the same. So 1,000 rupees is the base value and a 5% is the interest. Again, this 183 is divided by 365. So here we use 360 or 365.
360.
So here also let's use 365 only. Here also 365. So this is the interest for June and December. Let's assume I am selling this bond. Now everyone understood, right? How to calculate this interest for these periods?
Bro, one small doubt. 5% is daily base or monthly base? No?
The per annum base.
Per annum.
5% is the
Okay.
per annum. That's why we are considering 180 by 365 again.
Okay.
Okay. Everyone understood, right? This calculation. We just calculated the interest for 6 months and 6 months. but not exactly 6 months. We are taking day count convention. What is the day count convention? Actual by 365. Actual means number of days between these two
Number of
payments. Again, number of days between these two. That's how we are calculating. Okay. Now tell me, if I want to sell this bond, on 31st March 2024, which is actually between two interest payments. The interest we will
Yes.
get it on June 30th or December 31st.
December 31st.
But I'm selling this bond on
March 31st.
between two interest payment dates. I'm selling this bond. Now tell me, at how much price I can sell? Can I sell it for 1,000 rupees?
1,000 rupees.
No, sir.
Actual
I have
date.
discount.
01/01
Discount can include.
2024. How much it is? Will be contrast.
As a bond, I'll tell you, as a bond holder only will always have a right to get an interest. Suppose we have an interest payment date on 30th June and 31st December, right?
31st.
If I purchase my
Yes.
bond on 30th December also, as a bond holder, I only get an interest on 31st December. Even one day before we are purchasing, that bond holder only, that purchaser only will get an interest on 31st bond. It doesn't matter how many days you are holding. As a bond holder, he will receive an interest. On 30th June, on 31st June, whoever is holding the bond, they will get an interest. Suppose someone is selling this bond at on 31st March. If I purchase this bond on 31st March, I'll be receiving an interest on 30th June, right?
Yes.
So I'll be receiving an interest around like 24 rupees or 25 rupees I'll get. Right?
Yes.
Yes, sir.
It's 6 months is completed. 24
Yes,
rupees.
6 months interest I'll be getting. But I'm holding only for 3 months, right? From April, May, June.
Yes.
Yes.
Is it fair to get 6 months interest from me only as a bond holder?
No, bro.
No.
It is calculated on day by day.
Suppose even if a bond seller, if he is selling on a 31st March, if he is selling for 1,000 rupees, he will also get a loss, right? Because he was holding it for 3 months. After 3 months,
3
he's
months.
holding. So he is losing
3
3
months
months
of
interest. He is losing for 3 months interest, right?
Yes.
So what he'll do for these 3 months, again let's calculate the number of days. How many number of days we have?
90 days.
01/01/24.
Not 90 days exactly. 90 days, huh?
90 days,
Yes, sir.
bro. 92 days. February is 28
90
or
days,
29.
sir. Or 90 or 89 days.
It's a leap
So
year,
91
right?
days. Yes.
2024 is a
91
leap year,
days.
right? So 29,
Leap year, bro.
31st, then
89.
31st.
89 days.
91 days. 91 days, guys. 91 days.
Yes, 91 days.
Oh, yes.
So 91 days
29.
will be received. Sorry.
Yes, 91 days, bro.
So let's calculate an interest for this 91 days also. So this 1,000 rupees into
Into
5%.
5%.
5%
91 divided by
into 91 divided by
365
365.
days.
so 12 rupees, right? So what he
Yes.
will do while he's selling the bond, he will add this price also to this bond price. There is an interest,
Yes.
right? 12 rupees.
Yes.
Yes.
So we will add
Yes.
this interest also to this bond. So if anyone wants to purchase this bond, they have to pay this 1,000 rupees plus this 12
Plus
rupees.
12 rupees.
Sir, but in the market is available only for 1,000 rupees. Why should I pay 112 rupees? Because if you are purchasing on 31st March, on 30th June, how much interest you will get?
24 rupees.
You will get interest for
24
6 months, right? You will get interest for 6
Yes.
months. This 12 rupees, what you are paying excess for the bond, that also you will get. And the 3 months interest also you will receive. Getting the point? Everyone?
Yes,
Yes,
bro.
Mahesh.
Yes,
Mahesh.
bro.
Because while I'm selling this bond, there is an interest part which not yet received but accrued on that bond. You know the accrual concept? I have to talk about the accrual concept also. In accounting, we have a system called accrual concept. You know what it actually talks? It doesn't matter whether you have received a cash or whether you paid a cash. Suppose for this accounting period, it can be monthly, quarterly, annually, whatever it is, for a specific accounting period or a specific period. If you have earned income, that needs to be disclosed in the books of accounts. Similarly, if it is an expense, if you have incurred an expense, that also need to be recorded. Do you know the difference between earning and receipt? Anyone try to explain the relation, I mean difference between earnings and receipts? Suppose, how should I explain? I'm working in a company. Okay, every month, by end of this month, I should receive salary from the company, right? Let's say 50,000, 50,000 I should receive. By this month end, by tomorrow or day after tomorrow, I should receive 50,000 salary, right?
Yes.
What is my
Yes.
earnings in this month? 50,000.
50,000.
Even tomorrow, if I'm not going to receive, still it is an income for me. Why? If I'm not going to receive this month, I'll receive it in the next month. Maybe next month I'll get like a last month's salary and next month's salary. Both I'll get. So it doesn't matter that you are going to receive this salary next month, but it is your income for this month only, April month only. Because for this April month you worked from 1st of April to
Yes.
30th April. So we have earned
Yes.
income for this April month. Maybe you are going to receive it tomorrow or maybe next month or next year, but still it's an income for you. Similarly, expenses also. Suppose if you want to pay rent to your landlord, this month rent you have to pay on 30th April. If you are not paying any rent, do you consider it as not an expense? It is an expense. Maybe you can pay this month rent and next month rent also in the next month ending itself. But you are paying both rent, right?
Yes, Mahesh.
So can we consider like the entire rent, like this month rent 10,000 and next month rent 10,000? Total 20,000 rent is something belonging to May month.
Hmm.
Shall I consider like that?
No.
No, right?
No, bro.
April month
No.
expense is for 10,000. May month expense is 10,000. For the every period, whatever the expense we have incurred, we have to separate it. It doesn't matter whether you're paying it annually, 6 months once, 3 months once, or twice. You can pay at any time. But the expense need to be incurred for the specific month only. Now we understood the concept.
Yes, bro.
Yes, Mahesh.
That is called accrual concept. Here also the same thing. See here, he is holding this bond for 3 months. Even this 3 months also he is holding. He may receive interest on June month, but it is an income to him, right? For this 3 months interest.
Yes.
That's
sir.
why he is collecting this interest part also while selling the bond. So the interest has accrued on this bond. Interest is accrued. This interest,
Yes, bro.
the principal.
Plus that.
Yeah, the face
Yes.
value plus the interest part. All together is
Interest.
the coming. This is called dirty price. This is called dirty price.
Dirty
Dirty
price.
price.
Whenever the fixed income security, the dirty price concept is exclusive for the fixed income securities and bonds only. Because there will be payment of interest between two dates. So whenever you're purchasing the bond or whenever we are selling the bond between two interest payments, there will be accruing of interest on that bond. It may be for 1 month, 2 months, or 3 months. So until the interest payment will be done, that should be considered as an accrual part only. That's the reason we are calling it as a dirty price.
Dirty price.
Understood?
Yes, bro.
In
Yes,
June month,
Mahesh.
let's assume in June month, they will receive an interest somewhere like 26 rupees or something. The bond holder will receive an interest. Again, this face value of a bond will become normal price, 1,000 rupees. This is called clean price. Everyone understood?
Bro, explain me clean price one more time, bro.
Dirty price means we are saying that whenever there is an interest part accruing, you
Okay.
understood the concept of accrual, right? The bond price is coming with face value plus interest plus
Plus value plus interest, bro.
interest. If you want to purchase the bond, how much? What are the elements you are paying? I have to pay 1,000 rupees of face value plus there is
Plus
a
interest.
there is an interest part accrued on that, right? So for that also I have to pay
Yes.
now itself. Why I'm paying this now? Because after 6 months I'll be receiving that interest also.
Yes.
Understood?
Okay. Understood.
Yes.
That's the reason we are calling it as a dirty price. So what will happen after 6 months? The interest will be paid for the entire 6 months. For entire 6 months, the interest will be paid. So earlier, there was a bond carrying 112 rupees, right? Now what will become? It will become 1,000 rupees because we have received entire interest for 6 months, right? Now there
Yes.
is no interest on this bond. So bond without this interest part, accrual interest, called as clean price.
Clean price. Okay.
Understood, everyone?
Yes, bro.
Everyone?
Yes, Mahesh. Once.
This is called dirty price and clean price. Very, very important. So again, let me give you the important topics from the bond market. Okay, as a bond market, we know what is the bond market, what is the meaning of basic bond market, we should know, and what is the bond valuation. We don't need to work on the calculation part or something for this, but we should know what is the bond valuation. What is bond valuation? It is just valuing the present, future expected cash flows to the present value. That is called bond valuation. And what we discussed, YTM, yield to maturity. Interest income plus the principal amount all together will be included in the return. That is called yield to maturity. Till maturity, if you are holding the bond, how much returns, how much cash flows will be expected to get. That is called yield to maturity. And then we have a zero coupon bond, very important, zero coupon bonds, puttable bond and callable bonds, very, very important, and angel bond and junk bonds, and maybe fixed floating, right? No, that's not a big difficult concept. Then what else we have? Pay down, and we have a
Day
take.
count convention.
Then finally, dirty versus.
Bro, dirty pricing, bro.
Sorry,
Dirty price means he is paying the interest in installment process.
sorry, sir. Come again. Dirty
Acquired.
price means
Dirty price means is paying the interest in installment process.
no. Lokesh, listen here one more time. When you are purchasing the bond, are you listening from the starting?
No, just join.
Just now you joined.
Yes.
Then is that my fault?
No. It's my fault.
There will be a recording. Go and watch now, okay? Because I have clearly
Okay.
explained. Maybe if anyone have any doubts, similar kind of doubt or something. Anyone have any doubts on
No,
dirty
bro.
price, free price? So
No,
I'll
no,
try
no,
to. I'll try to. Again, I want to explain from the scratch location. Actually, the take home convenience I need to explain. Dirty price.
Okay.
It's better to watch the recording. If you're not able to
Okay.
understand, let me know. Again, I'll try to explain by tomorrow. Okay. Everyone, it's not only for
Okay.
Lokesh. Everyone try to understand this concept, dirty price and clean price. If anyone is not understanding from the recording, from the concepts, please let me know. Again, tomorrow we can discuss the same topic. Because okay.
Okay, Manish.
Because again, for one person, if you want me to understand, ask him to understand, that will be a bit again lengthy. That's the reason. These are the very important concepts on the bond market. Okay. Is everyone good with these concepts? Everyone? Everyone?
Okay.
Hello?
Clear, Manish. Clear, Manish.
Okay, great. Now, we will see the journal entries. See guys, the journal entries part maybe commerce students will be able to appreciate and understand, but for non-commerce students, it will be a bit difficult. So do not hesitate and don't confuse it, guys. As I said, I'll be taking few basic accounting classes, and I'll try to make you understand even the accounts as well. But I'll have to plan for that. So as of now, I need to cover the journal entries part as well in the same class. That's the reason we're discussing. Though you're not understanding, try to focus and understand. Try to understand something. If even you're not understanding, don't not worry about it. Okay, I'll help you for the basics of understanding accounts as well. Okay. First, we will see from the bond perspective, because always I said from the investor and holder perspective only we have to write an entries. So from the company perspective, we don't have to worry about it. From the bond holder, from the investor perspective only, we will see the general entries. Okay. So first one is we will see the sequence wise. While purchasing the bond, what is the bond entry? While receiving an interest, what is the entry? If you buy the bond on discount, what is the entry? If you purchase the bond on premium, what is the entry? And when you're selling the bond, what is the entry? If you are selling for higher than the price we purchase, what is the entry? All these things we will discuss here. Okay. First one is bond purchase. Normal bond purchase entry. Can anyone guess an entry? Commerce students. If I'm purchasing a bond for cash. Anyone?
Chase account data to cash account.
So what's your qualification?
Oh.
Are you commerce students?
Yeah.
See guys, most of the people will do these kind of mistakes. Purchase account is related to the trading. If you are purchasing goods, then only the purchase and sales accounts will come into the picture. If you are purchasing an asset, the real account come into the picture. The bond, is it a good or an asset?
An asset.
Hello?
An asset, I think.
It's an asset and it is an investment. So we have to apply the real account, not purchase. I mean, purchase is something related to the nominal account. So that should not come into the picture. Okay. Purchase, always we have to mention whenever you're purchasing the goods. Suppose we are doing some trading activities, purchasing of some raw materials, something, then we have to use the purchase account. Similarly, if you are selling the machinery, selling account, the sales account won't come into the picture. The machinery account, we are selling the machinery will come into the picture. Understood? I'll ask you basic question for the commerce students. Rent paid to Hari. Any commerce students, MBA graduates? Let me ask Manasa. What is the entry for rent paid to Hari? I can't hear you, ma'am. Hello?
తెలీదు.
Nice answer. Anyone else?
హరి అకౌంట్ డేటా టు రెంట్ అకౌంట్.
So confident, but still wrong. See, again the same mistake, guys. So the rent is a nominal account. When we are paying an expense, rent, do you write again Hari account? Why Hari is coming to the picture?
Rent account data to cash account.
Rent account data to cash account. That's it. Why you are putting, I mean, okay, taking that Hari into the consideration? In a nominal account, understand the meaning of nominal account. It's very, what do you say? Nominal means we know, right? తెలుగులో చెప్పాలంటే నామమాత్రపు అంటారు. So we don't consider the persons. Suppose we are paying the cash, it doesn't matter to whom we paid, from whom we are receiving. మనం ఎవరి దగ్గర నుంచి తీసుకుంటామో మనం ఎవరికి పే చేస్తున్నాం, not at all required. Unless until it is an account basis. Unless until it is an account basis, we do not consider any person's name in the nominal account. As rent paid to Hari, rent already paid, so rent is an expense, debit. Cash is going out, credit. That's it. Forget about Hari. These are the basic mistakes as a common student we do. Not only for you guys, even I put forward this question in some CPT students and some degree MBA students also, they will also do the same mistake. They don't understand the basics actually first. Okay, fine. I forgot about it. I'll have to teach you the basics even in the account. I'll try to teach you in a separate class. So now, for purchasing a bond, the entry is bond account debit. Okay, playing with this caps lock I have. One second, guys. Okay. Bond account debit. See. To cash account credit. This is the general entry for purchasing of a bond. Everyone understood? Let's assume the bond is
Yes,
purchasing for 1,000 rupees and cash is also going out at 1,000 rupees. Okay, this is the normal general entry. Purchase at par. Okay, now we will see the purchasing of a bond discount. Purchase bond at discount. When we are purchasing a bond, if you are getting something as a discount, that discount is an income or expense?
Income.
While purchasing, you are receiving a discount. Is it an income or expense?
Expense.
So you are purchasing some clothes at discount. The discount is also expense for you.
No, sir. It's
డిస్కౌంట్
profit.
Income. See guys,
Income.
while purchasing, maybe the purchase
We
is
will
pending.
purchase. Yes.
The purchase is an expense, but I'm talking about discount. While purchasing, you're receiving the discount, right? You're paying the cash and you're getting the discount. Similarly, you are selling something. If you want to sell some product, you are giving some discount. So if the discount I'm selling, is it an expense or income for you?
Incoming.
Income is not.
Again, you are confusing. Suppose if you want to sell 1,000 rupees product at 90 rupees, 900 rupees only. That 100 rupees is a loss or a income?
Income.
Loss.
Last.
Hey, I'm talking about selling. Listen this question perfectly. 1,000 rupees worth of product you are selling to someone else at 900 rupees only.
Okay.
You are selling the product. Actually, you can sell it for 1,000 rupees also, but you are giving a discount 100 rupees and you are selling it for 900 rupees. So
900
now tell me
rupees.
that 100 rupee discount is a loss or income for you?
Loss.
Loss
That's
only.
loss.
Loss.
Similarly, you are purchasing 1,000 rupees worth product at 900 rupees only. Are you saving or are you spending extra on discount?
Saving.
So is it
Saving.
income
Saving.
or expense?
Income.
Income.
100
Income.
rupees income.
Income
Similarly,
only.
let's assume 1,000 rupees bond they're purchasing for 900 only.
Yes,
Or
sir.
assume let's say 100 rupees as a discount. I'll write very clearly. So discount. Now I have to write an entry. Now tell me. Bond account debit. How much?
1,000 rupees. 900.
1,000 rupees or 900 rupees?
900 rupees.
900.
Guys, again you are mistaken. What is the bond value? We always have to record out a cost. What is the cost of bond?
1,000.
1,000
1,000
rupees
rupees.
only. 1,000 rupees only we have to record. Maybe it's you're getting it only for 50 rupees. Doesn't matter. At cost you have to record. Then cash, how much cash you are paying?
900.
1,000 rupees.
900.
900 rupees only we are
900
paying the
cash.
cash. And two,
Discount.
discount you are
100.
receiving, right? Why we are creating the discount?
For selling.
Discount 100.
Why we are creating the discount? Discount is a
For
which account?
selling.
Personal, real, or nominal account?
Normal account. Normal account.
Nominal account, not normal account. Nominal account.
Nominal account.
Hey, don't laugh. It's a serious discussion. Okay. So it's a nominal account. So as per nominal account, debit all expenses, credit all incomes. That's why you're getting credit 100 rupees. Everyone understood?
Yes, bro.
Okay. Then again,
Yes, sir.
purchasing the bond. This time we are purchasing for premium. You know about premium?
Amazon Prime. This type.
Jokes istunnarra?
Instead of paying full amount, we will be paying a
Extra amount. Yesterday we discussed right at par, at discount, at premium. We are paying excess. For 1,000 rupees bond, we are paying 200 rupees. I think you all got forgot about this concept. At premium, at par,
No,
at
sir.
discount. We discussed, right? Where is this?
Yes,
Here.
yes.
See this, guys. Premium means more than the face value you are paying. That is called premium. Okay. Now tell me this premium. When you are purchasing the bond, you are paying some premium. Extra 200 rupees you are paying. So this 200 rupees extra, is it a loss or a income for you? Is it an expense or income for you?
Loss.
Loss
Loss.
only. So let's write an entry. Now can anyone tell me the entry?
Bond value.
Bond account.
Bond account.
Bond account debit how much?
200.
Same again, 1,000 rupees only.
1,000 rupees.
Bond value is
To
always
cash
1,000 rupees.
right?
So
To
to
cash
cash
account 1,200. 1,200.
credit.
No,
How
sir.
much?
1,200.
1,200 rupees. But debit and credit should be the same, right? So where should I record this
Yes.
remaining balance 200 rupees?
Premium.
To premium.
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 It's
సార్
a loss.
ప్రీమియం అన్నప్పుడు సెల్లింగ్ ప్రైస్ అనేది ఎక్కువ ఉంటుంది కదా సార్.
Yeah, we are purchasing for 1,200 rupees, right?
Yes.
సార్ ఫేస్ వాల్యూ అదే సార్.
Yeah, face value is bond 1,000 rupees only. It's not changing. But we are spending 1,200 rupees. So cash is going out 1,200 rupees.
Yes, sir.
But the actual
1,200
value we are
Yes,
receiving
sir.
is only
Yes,
1,000 rupees.
1,000.
But where is the remaining 200 rupees?
Premium.
To nominal
That is access
account.
amount.
Here, as the income we are receiving, 100 rupees we credited, right?
Yes.
Yes.
So here we are paying 200 rupees loss. Excess we are paying, so it's a loss or expense. So where should I record?
Nominee account.
Yeah, nominal
Account.
account only. What is the nominal account principal? Debit all expenses. So that premium is a loss, right? So premium
Yes.
on
200.
purchase,
Purchase
200 rupees, debit.
200 rupees.
Now everyone
It's
understood?
2000 is the 200 rupees.
Okay, sorry. Now we understood everyone?
Yes, sir.
Yes, Mahesh.
Then we will see the entries for interest. Interest, okay? Normally, like suppose on receipt. Can anyone tell me interest on receipt? What is the general entry? We'll take the same example, guys. This example or something we'll take. Otherwise, let me take a new example here. We are considering a bond value is 1000 rupees at interest rate 3%. Okay, and payable on 3 months once. For every 3 months, there will be interest payment. That means quarterly interest will be there. But 3% is an annual interest. Okay. Now tell me, on interest retails, what would be the normal general entry?
Interest account data to cash account.
Interest account and cash account. When you are receiving an interest, is it an income or expense to you?
Income.
Income, right? Then why you are debiting?
Yes.
Debit always expenses, right? Now which account we have to debit?
Cash, sir. Cash.
Cash is coming out as a real account. So cash will be debited.
Debit.
Cash account debited to
Premium.
interest account.
Interest.
Or you can say interest received. Interest income account credit. How much? We'll calculate the interest. That interest amount will be added here. Okay. Suppose interest receivable. Interest receivable. Can anyone tell me the interest receivable entry? We are going to receive this interest on this date, so 31st March you will get. Then 30th June you will get. And 31st September, July, August, September, yes. September you will receive. And finally, 31st December. So on these 4 dates, you will receive an interest. Suppose now, if I want to account on 31st Jan 2023, I am writing this entry. I told you, right? For every month, whatever the period, the income earned on the accounting period, we have to show it as an income. I'll receive this interest, January interest, February interest, March interest, when? On March 31st. Getting the point?
Yes.
So I'll receive this interest, March interest on 31st only. But until that, I cannot show it as something, right? I have to show income of January month, I have to show income of February month, I have to show the income of March month also. Getting the point, everyone?
Yes.
So on 31st March, how to show this income? I'll receive this income on 31st March. But March, January month and February month also I have to show. So how should I show? Hello?
Yes, sir.
How to show this income?
Interest account to cash account.
Maybe let's figure out one thing, something. Suppose when we have received interest, what we're showing? Cash account debit to interest income credit. So which one is common here every month?
Interest.
Interest income will be common, right? Cash we will receive on 31st March. But interest is income for every month, right? Interest is every month. But what about debit? Okay, credited, we credited income. But what is the debit amount? We haven't received cash. Instead of cash, what we have to use? Interest? We haven't received the interest.
Interest receivable.
Interest receivable. Very good. So interest receivable is nothing but a accrual concept. Interest receivable account debit. So interest receivable, salary receivable, payable. You know this concept called receivable and payable. Receivable and payables. The meaning of received receivable. Can anyone tell me?
Received already has been.
Received means already we received. Cash received.
Yes.
Paid means already we paid. Payable means what? We haven't paid it. We haven't paid. Inka pay cheyaledu. But it's a payable. It's a liability. We have to pay. Payable means you haven't paid, but you have to pay. You can pay it next month or 3 months later, 1 year you can pay. But it's a payable. You have to pay it. Receivable also same thing. We haven't received it. We will receive it in the future. But until we receive what it is, receivable. It's going to receive. Definitely we are going to receive. That's why we are showing it as a receivable. Now tell me, which one is asset in these two? Receivable is asset or payable asset?
Receivable is asset.
Receivable is assets.
Lokesh? Receivable is an asset or payable is an asset?
Receivable.
Receivable. You understood? Receivable means something that I have to receive. Payable means something that I have to pay. So liability, which is the liability? Receivable or payable? Which one is liability?
Payable is liability.
Payable is liability. You're all good with this, right? Receivable is always an asset and payable is always liability. So all again assets should be debited. If there is an asset, the asset should be debited as a receivable. Okay, so that's why we are debiting the asset. It's an asset. So interest received. So the same entry will be continued till February also. In March month also, we will write the same entry. But we will receive the interest also, right, for entire 3 months. We will receive the interest for the entire 3 months, right? Getting the point? We are going to receive the interest on 31st March. But before receiving itself, we wrote it as a receivable. So for all these 3 months, I am going to receive an interest on 31st March. So let's write again on 31st March 2023, I'll be receiving an interest for 3 months. You are receiving an interest for 3 months. Now tell me what is the entry? This interest only. For 3 months, we accrued it as income, right? Interest income, receivable. Finally, on 31st March, we received that interest. Now, how to write that entry? What is the monthly interest on 1,000 rupees? 3%. Can we calculate like this?
30 rupees.
Into 3% is for total annual interest. We need it for monthly. So 30 by 12. So 2.5. So every month 2.5. 2. Sorry. So the same entry, the same 2.5, which I had to receive on February and January, we are going to receive it on March. Now tell me how to write an entry. What is the normal entry for writing an income? This one. For normal interest received, what is the entry? We are receiving cash, right?
Yes.
So let's write the debit as cash account. Debit. How much cash we are going to receive on March month?
2.5.
2.5.
No, sir. 7.
All 3 months interest I'll receive, right? 31st March, 30th June, 31st September, 31st
1,000
December.
rupees.
1,000 rupees.
1,000 rupees.
1,000 rupees.
1,002.
7.5.
7.5.
7.5, guys. The interest amount we are going to
Oh,
receive.
yes.
3 months.
7.5 for 3 months.
3 months. Okay.
Okay, that's debit. What should be the credit? What should be the credit?
Cash value plus
Now I'm talking
interest.
about the account name. Interest income already we created. For March
Interest
already we created,
receivable
right?
is 2.5.
Now understand one thing, guys. Until we received, one second, let me clarify this. So on 31st March, I'm going to receive 7.5. What is 7.5? Every month we accrued, right? We have to receive like this. Total together become 7.5. Finally, you're receiving the 7.5, right? So whatever that the accounts you have accrued, whatever the accounts that you have recorded as yet to receive, have to receive. Now you have to cancel it or not. You wrote it as a receivable. Finally, you're receiving it, right? We have to cancel this receivable account now. Isn't it or not?
Yes.
We have to cancel. We are going to receive it, right? Again, there is no point again receiving as an asset, receivable as an asset. So we have to cancel it. If I want to cancel it, how to cancel it? Here we debited this. So now we are going to credit this to interest
Receivable.
account credit. How much? 7.5.
7.5.
This is the settlement entry on 31st. Understood, everyone?
Yes, sir.
These are the general entries that we have to remember in the bond market. Purchasing and discount, purchasing on bond, and the interest. Now we will see the general entries for the sale of a bond. What is a bond sale of entry? See here, while purchasing we record it as bond to cash. Suppose we are selling the bond at par, same whatever the face value we have, same value we are selling for 1,000 rupees only. Now tell me what is the general entry? What is the general entry?
Cash account.
Cash account debtor to bank account. Cash account debtor to
Debtor to bond.
bond account.
Bond account, that's it. While purchasing bond, we debited, right, as asset coming in. While selling, asset is going out. So we will create that account. That's it. How much?
1,000.
1,000 rupees. And this is also 1,000 rupees. Now, suppose we are selling this bond 850 rupees only. Bond value is 1,000 rupees, but you are selling it only for 850 rupees. So are you selling it for loss or profit?
Loss.
Loss. You are sure right with this, right? With loss. How much loss?
150.
Huh?
150.
150.
150.
150. Give me a minute, guys. $150 is the loss. Now, tell me the general entry for this loss. Same
Cash
bond. This
account.
one also will consider. This one only. But how much cash we are receiving in this case? Are we receiving cash 1,000 rupees?
No, it
To bond
We are selling
850
for only
only.
for 850 only, right?
Yes.
So what about remaining to 150?
Loss. With
To
loss.
loss account.
So how to deal with that loss? Are we going to debit that loss or credit the loss?
Debited.
Debited.
Yes. Anna ఇంకా రాలేదన్న డాక్యుమెంట్ అబ్బాయివి.
dividend.
నా తొందరగా అన్న ప్లీజ్ అన్న. Loss on debit. How much?
150.
150.
Now let's assume now you understood this entry, right?
Yes.
Now let's assume the same bond we are selling it for 1,200 rupees. We are selling it for 1,200 rupees. Now tell me, when you are selling 1,000 rupees bond for 1,200 rupees, is it a profit or loss to you?
Profit.
How much profit?
200.
200 rupees, right? Now tell me entry for this one also.
Cash account. Cash account debit.
Cash account debit. One second. I will replicate that. So cash account, how much?
1,200.
1,200.
We are receiving 1,200 rupees, but bond value is only 1,000 rupees.
1,000
What
rupees.
about remaining 200 rupees? Is it profit or loss?
Profit and sale.
So are we going to debit the loss or credit the, debit the profit or credit the profit?
Credit.
Credit.
Credit
So
the profit.
profit, loss, or,
Credit.
sorry,
To profit.
profit
To profit
or
on
gain, whatever we call it, is a profit on sale. How much?
sale.
200.
200.
These are the entries for the selling of a bond. Understood, everyone?
Yes, bro.
Very, very important. Okay. So try to practice all these entries as well. I'll ask you questions tomorrow on all these general entries. Very, very, very simple, basic general entries. These are all.
Good.
Okay. Anyone have any doubts on this?
Okay. No, bro.
Anyone have any doubts? Everyone understood?
Yes, bro.
I'll stop the recording.